Do you ever wonder how the world's richest people invest their money? Knight Frank's 2023 Wealth Report provides insights into the financial portfolios of ultra-high net worth individuals UHNWIs. The report surveyed over 500 private bankers, wealth advisors, and family offices representing a combined wealth of more than $2.5 trillion. It found that UNHWIs not just invest their money in stocks and real estate, but also in alternative assets, such as art, cryptocurrency, and NFTs. Here's how the world's richest people store their money, according to Knight Frank's report. Commercial property 34%. Equities 26%. Bonds 17%. Private equity and venture capital 9%. Investments of passion 5%. Gold 3%. Cryptocurrency 2%. Others 7%. Let us now take a look at the different types of investments that the rich put money into. Before I continue, if you're new here, please hit the subscribe button so you make sure to never miss my weekly videos on wealth creation tips. 1. Equities. Equities, or stocks, are a type of investment that represents ownership in a company. When you buy an equity, you are essentially buying a piece of the company. According to Knight Frank's survey, 26% of the world's richest people's investment portfolios are in equities, or stocks and shares in companies. This proportion is even higher in the Americas, where it reaches 33%. In 2022, Warren Buffett's Berkshire Hathaway spent a record $68 billion on stocks as the value of the market rebounded. This is a sign that the world's richest people are still confident in the long-term prospects of the stock market. Investors can make money from equities in two ways. Dividends. Some companies pay dividends to their shareholders. This is a portion of the company's profits that is distributed to shareholders on a regular basis. The amount of the dividend is usually determined by the company's board of directors. Capital gains. When the price of a stock goes up, the investor can sell the stock for a profit. This is called a capital gain. The amount of the capital gain is the difference between the purchase price of the stock and the sale price. 2. Commercial property. Commercial property makes up a larger proportion of the portfolios of the super rich than equities. On average, 21% of their portfolios are invested directly in commercial property, and a further 13% is invested through debt funding or real estate investment trusts REITs. The most common type of commercial property that the super rich invest in is offices, with 43% of respondents saying their clients currently invest in offices. Healthcare is the most popular sector, with 35% representation. Environmental factors are also significant in how the wealthy choose which properties to invest in. 57% of respondents say their clients look at whether the property has a green energy source. 3. Bonds. Bonds are a popular investment for UHNWIs because they are considered to be relatively safe and offer a predictable income stream. Bonds are essentially IOUs issued by governments or corporations, where the issuer promises to pay the holder back their investment plus interest at a set maturity date. The maturity date is the date on which the bond expires, and the issuer must repay the bondholder. The interest rate on a bond is the amount of money that the issuer pays to the bondholder each year. The interest rate is typically fixed for the life of the bond, but it can vary depending on the creditworthiness of the issuer and the current market conditions. BlackRock, the world's largest asset manager, recently recommended that investors buy bonds as federal interest rates continue to rise. 4. Private equity and venture capital. The world's richest people typically invest about 9% of their portfolios in private equity and venture capital. Private equity is considered to be a lower-risk investment than venture capital. This is because the companies that private equity firms invest in are already generating revenue and have a track record of success. Venture capital is a higher-risk investment because the companies that venture capital firms invest in are still in the development stage and may not be successful. The potential return on investment for private equity is lower than the potential return on investment for venture capital. This is because private equity firms invest in companies that are already generating revenue, so the potential for growth is limited. Venture capital firms, on the other hand, invest in companies that have the potential for significant growth, so the potential return on investment is higher. 5. Investments of passion. Investments of passion are assets that are bought for enjoyment or as an investment. According to a survey by Knight Frank, 59% of respondents said that their clients were likely to purchase art this year. Watches and wine were the next most popular, while about a third expected clients to buy classic cars. 20% are in the market for luxury handbags. In 2017, Leonardo da Vinci's Salvator Mundi became the most expensive painting ever sold at $450.3 million. 6. Gold. The world's richest people consider gold as a safe investment, second only to property. Financial analyst James Jason of commodities trading platform MyTrade says that history has shown that during economic slowdowns, from the Great Depression to the COVID-19 pandemic, gold appreciates in value. There are a few different ways to invest in gold. Here are some of the most common methods. Buying physical gold. This is the most traditional way to invest in gold. You can buy gold bars, coins, or jewelry. Gold bars and coins are the most liquid form of gold, meaning that they are easy to buy and sell. Jewelry is less liquid, but it can be a good way to invest in gold if you also want to wear it. Investing in gold mining stocks. This is a way to invest in the gold industry without actually owning any physical gold. When you buy gold mining stocks, you are buying a stake in a company that mines gold. The value of your investment will go up if the company's profits go up. Investing in gold ETFs. ETFs are a type of investment fund that tracks the price of gold. When you buy a gold ETF, you are buying a small piece of a portfolio that is invested in gold. This is a good way to invest in gold if you don't want to deal with the hassle of buying and storing physical gold. 7. Cryptocurrency. The world's richest people consider cryptocurrency to be the most volatile investment, but it still makes up 2% of the average portfolio. While 34% of UHNWIs still believe that the non-fungible token NFT market has a lot of potential, 20% changed their minds after the recent crypto crash. Following the dramatic implosion of crypto exchange FTX in 2022, regulators around the world have started talking about how to better protect investors. 8. Others. Knight Frank's survey also lists other investments, which take up 7% of the average portfolio, but does not specify what this category includes. In this video, we've explored how the rich invest their money. We've learned that they tend to invest in a variety of asset classes, including stocks and bonds. They also tend to be more diversified than the average investor, and they often invest for the long term. Here are some additional tips for investing like the rich. Start saving early. The earlier you start investing, the more time your money has to grow. Make regular contributions. Even if you can only afford to invest a small amount each month, it will add up over time. Invest in a diversified portfolio. This will help you reduce your risk. Rebalance your portfolio regularly. This will ensure that your investments are still aligned with your goals. Don't panic sell. When the market takes a downturn, it's important to stay calm and not sell your investments. The market will eventually recover, and you'll miss out on gains if you sell at the wrong time. By following these tips, you can start investing like the rich and build your wealth over time. I hope this video helps you in being one step closer to your financial goals. Please give a thumbs up on the video if you have enjoyed watching. If you have any questions, please leave them in the comments below. And be sure to subscribe to my channel for more wealth creation tips. I'd see you in the next video. Bye.